This is Satya from P3 Traders. In this stock trading series, our second episode, this is on the market conditions and market. This is one of the exciting topic for me, and it's really important because market condition plays a vital role in your investment. Especially if you're doing a short term or even long term for 401k and other type of investment, it is really important when you need to step out of the market and when you need to get in. Like I said, market is like the current of the river, right? So you need to travel with the current of the river. If you are trying to go against, it would be like going to hurt you real bad. So understanding like where the market goes and then adopt your strategy accordingly is very vital and important. So I'll explain you how we use or how I use the software, our P3 software, to determine how the market works, and based on the market conditions, how I'm deciding on my reallocation of portfolio or doing my swing trading or even for my day trading as well. So when you get in over here, this is the overall market, and I'm recording it on January 22nd, 2022. This is on Saturday, so my last day market is like on Friday, January 21st, 2022. That's the synopsis. You are going to see it in this video. And it's an interesting week, last week. So this will give you an overall perspective of like what is our current market. This is a strong bear market as of yesterday, and in a long term it's a crab market. So there are three types of markets. Like one is like a bull market where it's going up and up and up, and other one would be a bear market, as you know, like when it's going down, and there is a crab market which is like going on sideways. So as it says, like most of the time, like 69% of the time it would be like a crab market, remaining would be a bear and a bull market. With that said, this is Dow 1900 is nothing but we have a data since 1900, year of 1900 to till date, and this is from the Dow Jones Industrial Average. So when you go over here, so the interesting part of this particular chart, and I really love this chart. I spend hours together in this chart whenever I read a book about like Great Depression or something, so I can able to go back and see how Great Depression played, right? How it happened and how it worked out and what happened. So we can able to clearly see how the market behaved at that point in time, or really a good market after that, like what happened. So all these things you can able to understand. When it comes to say today's market, like hey, that's okay, like what am I going to do today based on the market conditions, right? So this is very interesting. As I always say, it's like history always repeats because human behavior never changes. So when you go here, right, so this is our proprietary indicator called Z-band. So when you see this C-band is extremely powerful, and you can see it like, okay, whenever you have a green trend, it is always going to be a really a nice ride, and then the moment it becomes a red trend, it would be like it's a bear market. Basically it would be tanking down. And if you see like there is no like a red or green band, which means like computer says like, hey, I don't know what to do, like you can wait and then you can confirm it, right? So these indicators at the bottom is a different type of indicators which will be giving a different algorithm, and Z-band is another different type of an algorithm that you can see. So combining these two, right, so if you see like, hey, the bottom is red, green, and then I'm having a G band, can I ride? Yes, of course you can ride, so all the way. And then when you see it like this, so you want to get out, this is 1 week, right? Next week you want to make a decision. So basically like how I will make the decision is like next week, if it is going to be like a lower low, then I will think like, okay, there is a bear movement starting to happen. But in this case, if you see here, it is not a lower low basically, so it's almost like come as a next mirror kind of, and then it started climbing. So if you interestingly see these patterns, right, so this has happened like here. Similar kind of a pattern is building up here as well as of last week. So this tomorrow or Monday is going to be really interesting how it's going to happen. So for me, I'm not speculating or I'm not anticipating how this is how the market is going to behave tomorrow or Monday. I'm not there. I'm having a very clear action plan of like what going to, if the downtrend happens, what is my strategy, and if the uptrend happens, what's my strategy. So that's all. I'm not predicting the market, but rather I will be having my plans available so that when the system says like, hey, it seems to be a bull or seems to be a bear, I will adopt the model like that and I can proceed with it. And the interesting part is you can able to go back how many years you want. Like you can have a 5-year model and you can go like how many years you want, and you can able to test your hypothesis. Hey, look, I mean, like, okay, if this is red and I'm having a Z band red, and then if I leave it alone, right, so until my Z band goes off, and then if I get out, that's a good trend, and you can go back and test. And this model was tested for like almost 90 to 92% of success rate, so you can able to see it. So something like this, you can have a small blip, you have it, and then green came in, and then it went off immediately, right? So within 2 weeks or 3 weeks, that could happen, right? So what is your strategy? You will come out. Yeah, I will come out. See, this whole week, the whole year, right, I may not be in the market, and then once everything comes up, I'll be in the market. This is purely for the long term. You can strategize it out. And for the short term or a swing trading, so what we can do was based on this model, right? So how the market is going to behave at this point in time, then I can able to execute my bear plan or a bull plan, right? Bear plan, I can explain you in the future videos how the bear plan works. And in the bull plan, like, okay, I'm going to go longer with certain stocks or ETFs or indexes. I can do that one. So that's how it was designed. And another interesting part is, okay, I'm pressing Control B. This is just a reference. As per the Wall Street, 20% of the downturn from the highest point, they are calling it as officially it's a bear market, right? If you see here, this is the top, and then this line will automatically tell you like, okay, if anything comes down this red line, that is a bear market, and if anything goes closer to the green line, that is a bull market. So it was keep on climbing closer to that since like 2020, whenever it happened. After that, it started climbing. So I was in the market for a long term somewhere over here, because this is where the confirmation comes in for me. So I will let it run, and then I came out. I didn't came out here because I was waiting for the next candle. This candle, what will happen? Let me maximize it. I was waiting for this candle, what will happen, and then if it would have been a down, next red candle, I would be out. I was waiting, but since it's a green candle, which is an upper candle, so I traveled all the way. So I traveled all the way until here, and then I came out here, and since then I was waiting to happen, like what's going to happen, because it's stopping up. So this is how you can able to plan your model, and to officially say like where is my bear market or where is my bull market, these lines will tell you. And again, it's just a reference for you. You no need to use anything. So usually I will keep it simple. This is how you can manage it. This is purely designed for the Dow indexes and how Dow indexes worked over like a century from 1900. We have another reference point for the market, which is our own indicators. So if you see, we go with different time frames. Daily, we track around 7,300 stocks, and then we will build a model wherein which how my 7,300 stocks explains the trend of that day and week and month, right? So if you go for a week, you can able to see what happening on the week, and you can able to see the month you can. So this is important to see different time frames, and based on that you can adapt it. So this is so critical, and this is again the same Z band, So if you are in long term, if you are entering over here, when once it's get the green trend and you leave it alone, you can go all the way here. So it tried to break up because the boundary of the Z band is important. So it hits, reflect, traveled all the way. Again, it hitted on the boundary of the Z band, and then again it popped up. Now, like last week, it broke. Last 2-3 weeks, it started breaking the Z band and coming down. If you give you more perspective, I'm adding a trend line. Trend line, usually we will, most of the softwares in the market, they will draw the trend line based on the higher points and lower points, but here we automatically draw the line, so which is extremely powerful. And this dotted line is a short term line, and the hard line, the green line, is a long term line. So if you see here, both of them got broken, and then it's coming down. The same if you see it weekly, again at this point in time there is a red trend started, and then it's tanking down for like past 2-3 weeks, and you can see the Z band. And let's go to daily, and you can see it's similar kind of a fashion. So all my 3 different time frames are telling me like, hey, there is something happening at the bear side of it. So if you are on a long position, better come out and then wait for the things settle down. And the moment if I get the green trend, let me see, yeah, sometimes when I started getting these type of a green trend, then I'll be back in. So like if my Dow 1900 chart, and then here like daily and weekly and monthly, if it's coming to a similar kind of a trend on the green, then probably I'll be in on the green trend, which is long. And if it's coming up to the red trend, then I'll be on the short position. If you want to have more clarity, you can add the support and resistance lines. See here, these are all the powerful support and resistance lines. Again, it would be done by the system itself. So if you see here, there is a huge support and resistance. There are 2 lines there, and it broke those lines and then started going down. The moment it broke on 18th, I was like seriously looking into it, like, okay, hey, what's going to happen? And the last whole week it's coming down. Similar when you see here weekly also the trend line got broken. So it was like, okay, so something is interesting. And the same thing happens, it's nearing the bottom of the what you call the Z band boundary. So is it going to break? I don't know. I'm not expecting or speculating anything for Monday, but I'm just keep watching like what's the behavior of the market. Going back real quick to the Dow 1900. So this will also gives you, as I said, a reference of like, hey, this big candle, the next candle, what's going to happen determines my action, how I'm going to plan my trade in the next week, next coming week. So the whole point I'm trying to make is keep your rules simple, and then definitely don't watch any news which will give you more of a staged news. And most of the time news will tell you like after the effect. What I mean is like nobody is going to tell you like what's going to happen on Monday, but if something goes down, then they will say like some news associated with it and say like, oh, this is going down because of this reason. The same thing when it goes up, then immediately they will write an article and saying supporting, oh, this is going up because of this reason, right? In last 1 week, if you see it, there are a lot of news came up like, hey, your bear market started or correction started, like all these indexes are falling down, and they are coming up with an idea and their own theory of like why it's going down, right? Nobody is giving you an idea of like what you need to do, right? Of course they are going to tell you, but they are not philanthropists to tell you like, okay, to earn money on your end. So you need to have a process which you can trust based on the back end data, which is like this. You can go like all the way to 1900 and see like what happened on 1900, 1901, and then you can go like 1 year at a time. You can go like 1 year at a time and see like, okay, what's happening and how is my strategy is going to look like. Hey, look, like I got a red and I got again a red. I'll be out when it comes like this, and then I will either execute a bear market strategy, or I'll be out on the market and hold my money until it come down like this, right? So until it come down, and once I get the green, then I'll be back entered and then leave it alone to go, right? This is 1901. So you can keep going. Say 1904, what happened, right? So if you are out here, the bear market started, and then you are waiting for this whole almost like 8 months, and then like once this one starts, the red one starts, if you are green one starts, if you are entered and you traveled all the way, this is basically you reduced your losses. You didn't invested, and you gone like you invested 100, and pretty much you will be in $50 here, right? And then you need to wait to climb all the way from here. So your health will suffer because you will be in a extreme emotion. What's going to happen for my money, and I need to suffer for this whole 1.5 years, right? So if you are having $100, you came out and hold that $100 and buy it over here. Here your buying power will double technically, right? So so because all your stocks here selling at $100, you will get it at $50. So you will buy, like, instead of one stock, you can buy two stock, just as an example, and then you can travel all the way. So this is powerful, and you can able to build your rules extremely simple, proving yourself how your rule going to work based on the indicators and others here. So this is all about the market. Market is crucial and important, and in the next session we can able to talk about the sectors and how you can able to manage different sectors, and out of each of the sector, how you can able to find out which stock would be good, and then start investing. This is for a long-term diversified portfolio that you want to keep it. We can talk about it on the next video. All right, thank you everyone.